Hello, everybody, and thank you for joining us for an episode of the Financial Commute. I'm Chris Galeski, your host. I'm joined by Patrice Bening, one of our wealth advisors here at Morton. I'm excited to have you, Patrice. Thank you.
Thank you for having me.
You know, the purpose of this podcast is to talk about what's going on in the world, how does it affect our investors, and what they can do about it. Over the last 15 years, we've had zero interest rate policy, meaning you could borrow as much money as you possibly wanted at very, very cheap interest rates. And then we had the pandemic in 2020. A lot more stimulus measures were kind of thrown out there, money all over the place and rates down close to zero. It caused some really interesting issues, especially within supply chains too. Mm-hmm. And one of the things that came out of that, or early on in the pandemic, was there was a chip shortage for cars, and it caused used car prices to skyrocket.
It really did.
But you came across an interesting article this week that was talking about this sort of burst of that bubble, and used car prices are falling dramatically. You've got car companies like Carvana where that dropped by 24 or 30% after posting earnings. Tell me a little bit about what that article had to say about used car prices.
Well, I think what's interesting to even think about the used car market is that when you go to even get a loan for a used car, you're talking different guidelines and different parameters of lending. So right. A lot of the traditional banks hold that on their balance sheet. So to your point, when interest rates were very low, and a lot of the dealerships were able to actually, because of the supply chain disorders, were able to create almost this inflated type of demand. And because of the cars, because there's a shortage of cars being on the market, the demand went so up, and then the prices was huge.
Right. And so now the Fed has started to raise interest rates. So instead of getting a 2%, car loan for 5 years, buying a new car, the average car loan was like 6.5%. Yeah. And if you're buying a used car, the average 10. Price was like 10.
That's right.
I mean, that doesn't make financial sense to borrow money for 5 years at 10% interest rate to go buy a used car. And so what that's causing is more and more inventory of used cars out there. And there was an auction recently where, very few cars got sold, if any, because they weren't reaching the prices that they wanted. A car might be, trying to get bought for $70,000, but the bids were down at 60. So used car prices are falling through the roof. The Fed is kind of getting what they're wanting in terms of raising interest rates and bringing down inflation, don't you think?
I think so. And I think the other point is, like, we remember in 2008, the subprime mortgage market, and what happened is when that imploded, and there's a subprime car loan market, because some of those borrowers that are going for those 10% interest rates may have less than stellar credit.
Right.
So if you think about if interest rates are going up, there's a possibility that market is about to implode as well.
Yeah, it's interesting. I mean, some of these companies that, not picking on any of them, but that make our lives easier, right? Airbnb, VRBO, Uber, whatever. They're incredible technology companies, and they're trying to disrupt traditional business models. Right. Carvana was the same way. They wanted a direct-to-consumer type atmosphere with purchasing, no haggle prices, things like CarMax. But it seems like it's somewhat backfiring in their face right now because there is so much inventory, the cost to borrow is so much higher, and people have fears of recessions and the Fed continuing to raise rates, that these companies are getting hurt pretty bad.
Yeah, it's going to be very interesting to see how that kind of plays out in the coming year, just because you can't have, even if interest rates level off, we're probably going to have a higher interest rate environment for quite a while.
Yeah.
So what that's going to do to the bottom line of those car companies, it's most likely going to affect them. So
if you were in the market for purchasing a car today, what do you think you would do?
That's a great question. I think if you have great credit or decent good credit, there's, I think, still a lot of incentives to go get a new car. It's that whole story: do I buy? Do I lease?
Right.
How does that play into my life? But I bought a used car during the pandemic, but it was from friends, and that kind of, it was, thinking back, we lucked out because I did not have to go through a dealership, and we just were able to negotiate. It was their third car. They realized they don't need anymore. But I have friends right now looking for used cars, and they are really having a hard time, and they don't want to go get a loan because of the really high interest rates.
Right.
And they want to be able to pay cash, but then they don't want to pay $15,000 for a 10-year-old car.
Right. Well, they may, if they can be patient from what the data is showing, if they can wait 3 or 6 months, they might be able to get that $15,000 car for $10,000 or $11,000.
Yeah.
And that could be more attractive for them to be able to pay cash.
That's kind of what I've said to some of them. I'm like, just wait a little bit. It's hard. We live in LA. We need a car. So
right.
when you're desperate for a car, sometimes you'll bite the bullet. But I would say, to your point, I think it's worth the wait.
Another interesting thing that's come about this last week is the FTX, the cryptocurrency exchange. It went from being valued at close to $35 billion down to zero, basically overnight. There was not so much of a Ponzi scheme, but definitely misappropriating client monies to then be backed by secured loans for these companies. And so a misappropriation of dollars is a huge issue. But why do you think some of these things happen where you've got the boom and bust with used car prices? You see something basically created out of thin air, like this cryptocurrency brokerage firm, created out of thin air, skyrocketed valuations, and then down to zero. Why do you think things like that happen?
It's interesting. There might be, I think crypto is a very different space, I would say, than it's not as tangible as a car or real estate. So
right.
I think you've got people with FOMO that, wanted to get into something like crypto with zero knowledge on how to tackle that, and being such a volatile type of asset class, if there's such thing, or currency. When things are not going the way that are supposed to go, then you will have those things that would just fall off the cliff, and there's really no backing for it. So
I think the biggest cause is keeping interest rates at zero for as long as we did. It forced investors to go farther and farther out on the risk spectrum to try to earn a decent return. There was this fear of missing out, like, oh, everybody else is making money, maybe I should too, without really understanding the fundamentals of what some of these businesses are, and then how they're collateralizing those businesses or using assets to get loans. And then when the Fed starts raising interest rates and you need to pay off that debt, all of a sudden, if you're not cash flow positive as a company, you could run into some serious issues.
Be in a crunch. Yeah.
So it sounds like the best advice that you have for people is that if you're in the market for a used car, probably wait about 3 to 6 months. You're likely to get a better price. Maybe you could pay all cash.
Yeah.
If you've got a good credit score, you could still probably get a decent deal on a car loan. And then stay away from some of these esoteric investments that don't generate real cash flow or help protect clients that you truly understand. Like, make decisions for yourself.
Absolutely. Unless you want to go to Vegas and play with your money like that, by all means.
No, I don't think any of us want to do that. Patrice, thanks for joining us today.
It's been a pleasure. Thanks, Chris.
Yeah.